In this video, I'm breaking down the top 10 mortgage IMB lenders like stock charts so we can see who is actually winning. Currently, nobody tracks mortgage companies like stocks. But if you think about it, we should. Because if you only look at a snapshot of a company today, volume, headcount, then you're actually missing the story because what matters is trend, momentum, direction. If you don't know me, I'm Thomas Meister. I am the agent for loan officers. I represent loan officers like a sports agent represents top producers. Let's get started. Today, we're going to be using Redder to look up the production for the last 12 months on some of the top IMB lenders in America. And so what you can see here is I've actually added a few filters. Number one is we're looking at the last 12 months. We're also only going to be looking at mortgage companies that did at least 10,000 units. Really, we're only focused on the top 10. And I had to add a percent purchase because if I leave it empty, we end up with a lot of companies that aren't relevant. But one of the things that I actually noticed is if I change this to even 40%, one of the companies that's going to fall off is actually Loan Depot. And we're going to talk about that today. So we're technically going to be looking at the top 11, but Loan Depot is one of the longest standing companies, large IMB lenders. But let's look at their trends because again, we want to see how they've been performing over the last 12 months and beyond. So let's dive into number one, the largest retailer individually in America, CrossCountry Mortgage. So if we look at them for the last year, we can see that they've grown a lot. I've been releasing videos. I've been talking about this. They've grown by $7.3 billion in the last 12 months. Let's back up and actually just look at this in the past week. We have our new weekly gainers and losers video. Go check that out on our YouTube channel. But in the last week, they actually bought Summit Funding. That's one of the biggest reasons for CrossCountry Mortgage, their growth is, and we'll see that when we back up to the last year. But, and this is going to take a little bit longer to load than usual because there's a lot of people. Summit Funding, you can see who's coming in here, right? But if we were to count the number of $10 million plus producers, right? There's a lot of them, but of course that's because they bought a company. And then you can also look at the losers or who left, right? So there's one top $10 million plus producer who left. So this is interesting, but I'm going to quickly click on this because one of the things I want to start looking at is noticing I'm going to look at this 25 plus because basically this is a loan officer who's doing on average at least 2 loans a month, right? So it's 33%. Just make a note of that because we're going to go through each company and just kind of look at them as we progress, right? So in the last week, right, they've grown by 1.7 billion. In the last 2 weeks, same basically. In the last month, it's 2 billion. So there was a bigger change of people coming in. And I wonder who it was. So if we just sort by came from, is it, okay, a bigger producer from CMG? Let's see if there's just a big kind of company trend. Okay, some bigger people from MLD. They're a builder, I believe, right? I could be wrong, but I think that, well, let's open one, right? Because that's one of the things that we can do occasionally is dive into the rabbit hole. It does look like I'm wrong. So I just don't know MLD and I'll have to brush myself up on them. But we're looking at other trends here. So what are some of the other trends? Okay, some more people from New American Funding. Let's see. Newer previously inactive just means that doesn't mean they're newer previously inactive. It just means that there's a gap in their license. So I could click on Ryan here, for example, and look at him individually and see where was he before. So let's see, Presidential Bank, Summit Funding, lots of Summit, obviously. Okay, so let's back up even farther. Let's look at the last quarter, 3.64 billion. Let's just back up all the way to the end and then we'll dive into it. And that'll take a while to load. So I'll just talk while it's doing that. And then last 6 months, 9, and then the last year, 7.3. So that's a 13% growth, by the way, over the last 12 months. And one of the things, again, if we're going to start analyzing companies kind of like we do stocks and we're going to chart them, kind of like a candlestick, right? If you imagine, over the last week, 2 weeks, month, quarter, etc., is what are some of these bigger trends of these companies and how are they performing overall? So right now, I'm just going to leave it sorted by volume, right? And it defaults to last 14 months. And I believe the reason it does that is because sometimes the last month of someone's production can not be full, right? So right now it's currently April 1st. This is not an April Fool's joke, by the way. But we might be missing some data for March. So I think that they're showing a little bit more than they really should, right? But obviously there's a number of $100 million plus producers who've joined and you can see where they're coming from. 2 came from IMB Mortgage. So it's actually a big deal. That in the last 12 months, they took 2 brokers essentially back into the IMB space. eMortgage, another huge broker, and then 2 from Movement Mortgage, 1 from Guaranteed Rate, kind of like their rival, And then Bay Equity, that's interesting. Bay Equity. Bay Equity was bought by Redfin and then they sold to Rocket recently. So I could click it, but I'm going to resist the temptation. Okay. Let's see. So they got someone from Fairway, but there's obviously a lot of people here. Let's sort again by company so we can look for bigger trends. So, a group from that's American Neighborhood Mortgage. I believe that's Annie Mac actually. It's because that's the DBA name is Annie Mac. American Pacific Mortgage is a group, and then Arclatech is Benchmark, Atlantic Bay and Atlantic Coast. Okay, there's a bigger group coming from a bank here. Maybe they bought that bank. I don't know. But if I click it, well, let's do that real quick. Dive into the rabbit hole once again. In the last year, they're still doing production, right? They're currently running at, they were 832. Now they're running at 652. So they did not buy the company. It looks like a larger group maybe just left. And I guess they could have bought it and if the owner kept it there as something else, maybe servicing. I don't know. So Bay Equity, actually, there's a lot more Bay Equity people that had transferred. You know what? That might be the company name. So that's where they transferred from because they left Bay Equity, and that was when it was Bay Equity before it became Rocket. Technically now. Let's keep going. Canopy, Cardinal. So a number of Cardinal people, and then CMG, a number of CMG people. Again, we're looking at a year. So on the bigger companies, this is going to be, there'll be a lot of this that you can see. Fairway, number of people coming from Fairway. I think you get the point. If you want to see this more, link in the description. You can set up your own Redder account and dive into it. But CrossCountry kind of diving into that rabbit hole so we can understand that sometimes there's groups that move, right? It's not just individual people, but you probably know that. So CrossCountry Mortgage, if you look at them as a stock, obviously it's a very well-performing stock. The reason that this might matter is because if you think about what is the company doing right, CrossCountry Mortgage is the biggest retailer in the country. And I think that they obviously, they just bought Summit Funding. So there's obviously a lot of opportunity, right? They are going to be doing sign-on bonuses. Some smaller companies can't do that. They have servicing, I think, what is it? Two harbors, acquiring two harbors. I believe now, because they're only servicing something like 70%, or they can service up to 70% of their business. Now they can do probably 100% of their business after acquiring two harbors. So there's other things happening within CrossCountry that people look at them and evaluate them as a platform, potentially land, and it's promising, right? Or it's not about what does a company have, it's how much of what they have matters to you, okay? Because what do you need to be successful? People look at CrossCountry, and obviously it's one of the places that they are evaluating as a successful place for longer term, right? So let's move on to our number two. So the number two, and this is again based on the volume for the last 12 months, coming in at number two is Guild Mortgage. So Guild Mortgage over the last year, not performing as well, right? But let's back up and let's look at micro. In the last week, 60 million. 2 weeks, 47, so not as bad. Backing up farther, month, down 110. Quarter, down 70. 6 months, down 150. And past year, 70. So it's been going down, but it's been in recent, I guess, right? It's not as bad. Actually, no, I would say in the last month, it's technically worse. So if you looked at it, it is declining, but they're also gaining, right? It's not every single month that they're losing, because it's, from 47 to 100 to, it's not as bad going back from month to quarter. So they obviously gained production, over those other months. So they're on a downward trajectory, right? If you look at it as a stock, but it's not, I would say, indicative of something being catastrophically wrong. I have clients, I know people at Guild, and Guild is a perfectly great company for a lot of people. I would say just one industry news thing is they got bought. And so now they're 100%, Bayview, right? So Bayview basically, from having a minority ownership of them, has 100%. So they were made, is it the right term, private again, right? So they were brought into Bayview basically to be within 100% them. Guild Mortgage, slightly downward trajectory, right? If you were to evaluate them. And again, they're the number two. They're the second biggest IMB lender that does at least 30% purchase, right, in the country. So This is where we're going to look at the third biggest, but it's not necessarily biggest when you consider how much refinance business that they do, because I have a feeling if you were to look at traditional loan officers, right, like a traditional referral-based loan officer, they are not doing as much refi, right? Like it's probably a healthy balance, right? 75, 25, 75% purchase, 25% refi. And of course, it can vacillate back and forth. They could be doing 50% purchase and 50% refi. But for a company, I calculated it. What was it? It was like 20 something percent. That's pretty extreme for an entire company's makeup. 21%. So only 21% of loanDepot, of their business, of the 20 billion, right, that we're looking at and counting here, which by the way, technically they're not number 3 if you look at, that's the number of loans that they do. So that's actually a good point, is I probably should sort this by volume. Let's see if that changes. Obviously it's going to change the order, but it's going to make them number, well, technically not 8 because we're not counting DHI, that's a builder, and this is Veterans United. So they're doing, they're like online doing veteran loans. So 1, 2, 3, 4, 5, 6. So technically they're not 3, they're 6 because that's just units, right? Not actual volume, but let's stay with it. So loanDepot in the last year, down 2 billion. In the last, so let's start at the top, right? loanDepot in the last week, down 65 million, even though they gained originators. So probably, I think, and we commented on this last time on our weekly gainers and losers, they're probably gearing up their call center to handle more leads and stuff like that. In the last 2 weeks, they're actually up 60 million. In the last month, they're down 176 million of annualized production. In the last quarter, they're down 510 million. 6 months, 939 million, and 2 billion in the last year. Again, if we look at this, and I have friends at loanDepot. I'm not throwing shade at anybody. I'm not talking down about any company, but the data is the data. So if you look at the data and you look at the candlesticks, the chart of it, then loanDepot is on a downward trajectory, but they have had some good months, right? I think it was quarter, or no, it was technically 2 weeks, right? 60 million, and then was it 6 months from month to quarter? No, it's kind of, I would say, if going back a year to 6 months, that's where it like is massively swinging. And if I were to click this, then who joined, right? It'd take forever to load. I'm not going to click on it right now because we're just going to go through all the companies. But this is interesting to see, in my opinion, because I have a lot of people, a lot of clients, a lot of friends asking me, who are the companies people are joining right now? And if you only take into consideration today, then you are missing the story, because what are the trends? What is happening? How many $10 million plus producers, people like to use that as a barometer, right, are joining or leaving a company? Because it speaks to how the company, the decisions that they're making. You could even factor in AI and technology, all that stuff, their tech stack, compensation, etc. What are they doing? Leadership, culture. What are the decisions that they're making? Because indecision is a decision, by the way. So not doing something is choosing to prioritize something else. Last 12 months, loanDepot, technically on a downward trajectory. So technically guaranteed rate is number 2, right? If you look at volume, kind of take that for what you will in terms of, in terms of units, it was lower. Last year, they've gained 2 billion, right? But let's back up. Let's look at it. In the last week, they're up $136 million annualized production. 2 weeks, a little bit better, 146. Month, 340. Quarter, 870. 6 months, 1.34 billion. Past year, 2 billion. So if you look at guaranteed rate, and remember that guaranteed rate has a family of companies. So there are some of those that fall directly under guaranteed rate, like Citywide Home Mortgage, Proper Rate. I forget some of the other names, but there are some others who don't, like Origin Point. Origin Point is part of guaranteed rate, but separate as an entity. You could look in here and you could see, because that's a joint venture with Compass. And then Guaranteed Rate Affinity, also separate, because that's a joint venture with Coldwell Banker. And KBHS Home Loans, that's a joint venture with KB, the builder. So, I mean, technically Guaranteed Rate is like a $60 billion company, right? 60 billion plus, if you add all that together. And it does matter at the end of the day, because I'm not going to click on those companies because it we don't have time for that. This video is just about the top 10, but that would be interesting. And maybe I should do that in a separate video. Comment below or let me know, reach out to me if you think that that would be valuable just to focus on one company like Guaranteed Rate and look at the family. So Guaranteed Rate as a company on the charts, they're on the upswing. So coming in at Guild, remember Guild technically number 3, but we talked about them. They're on a downward trajectory. So let's just stay in terms of units, right? Because I think that will keep us on track here. So let's look at Fairway. So Fairway Independent Mortgage past year, down 1.26 billion. But let's look at the full picture. So in the last week, they're up 12 million. That's okay. The last 2 weeks, they're up 26, still okay, approaching good. In the last month, they're actually down 84 million. Quarter, down 414 million. 6 months, 600 million, basically. And year, 1.26 billion. So it's only in the last couple of weeks that they're actually performing a little bit better, like starting to come up if you were to track it like a stock chart. But obviously, Fairway is going through a little bit more turbulence as well. So as a stock, not performing as well as some of the others. And Fairway is one of those big companies that's been around for a while, and not throwing shade at any company. It's just, again, people are asking me, and so I'm putting it out there. So you have the data out of the top 10. And by the way, this is just the top 10. We're not even looking at all the other companies, because there are other smaller companies that are doing really well. Some other smaller ones who are not. So Fairway on the chart, technically in the last 12 months on a more downward trajectory. Up next, we have CMG. So CMG, and again, they're, if you were to look at volume, CMG is coming in at number 4, really. So CMG in the last year, grown by $851 million annualized production. So let's back up. In the last week, up 52 million, 2 weeks. So not as good actually in the last 2 weeks, because that's flat basically. 1.5 million is like 1 or 2 loans, depending on if it's a jumbo loan or whatever. Last month, 46 million. Quarter, 327 million. 6 months, 612, and then 851. So if you look at that, it's obviously in the 12 month, it's been going up. And then more recently, it's kind of like flatlined a little bit. They've grown and lost some people. So it's, a well-performing stock, so to speak. But I would say more recently, not winning. Well, the reason, by the way, if you were to say they're not winning or they're just not performing as well, it's because they're not growing as much. There's 2 ways to grow. Either your current people do more production, right? You capture more of the market share with what you have, or you recruit. So specifically here, we're really talking about recruiting, because personal growth isn't something that just overnight these swings happen, right? Like if you're a $30 million producer, you can't just be a $100 million producer in any of this time period, right? That's something that will happen if you are doing the right things, making good business development decisions, pivoting, you're doing coaching, or you're adding things into your business, or you're changing your process, making it better. Switching companies most of the time doesn't do that, though. Doesn't help you personally do more production. It's just going to help that company, obviously, and they want to attract you. So maybe they're giving you some money. Your production is not changing. They're incentivizing you to join them if they're giving you a sign-on. Some companies aren't, because their value proposition is giving you better economics. So that way you make more money longer term, right? And to each their own. There's different ways, beauty's in the eye of the beholder when it comes to who do you want to work for and why. So CMG as a stock, they're performing well. So next, and we're looking in terms of loans, we have after CMG, New American Funding. And in terms of, so they're kind of about the same, still middle pack. So New American Funding has been on, a growth tear as well. So if we look at the last week, $29 million annualized growth increase. Last 2 weeks, 178. Last month, 511. Last quarter, almost 2 billion. 6 months, 1.3 billion, and year 1.73 billion. So obviously, New American Funding is only growing if you look at them as a chart, as a stock chart, right? They're only going up on every single metric that we really do have. The one thing to take into consideration is in Redder, we have access to basically going back some of their performance numbers, because what this is looking at is it's looking at the originators at that company. If they were to all have worked at that company over the last 12-month period, but some of them didn't, right? This is based on growth, right? Same time last year, the people who work there, these are the loan officers, 2,488. Their annualized production worth was 18.41 billion. Now there's more people there 12 months later, and the total value of those people over 12 months is 20 billion. This is not actually that number. This is reality, right? Down here in the office, it says office performance. That's because you don't have to look at just a company. You can look at the company, an individual branch, or individual loan officer, right? If you have Reddit or any platform, you obviously are doing that. But we can look at the reality performance, right? Like year to date, they're at is that right? 2.8 billion. That's probably not right. 5 months, or this is all of 2025. So all of 2025, this is what the performance of the company was. 2 years. In 2024, it was only 12, right? And then in 2023, it was 10. So they're on a growth trajectory, even just looking at their, those time periods of closed, right? Reality, not estimates on the people who work there. So New American Funding is on an upward growth trend. Coming up next, we have, after New American Funding, Movement Mortgage. So what are they? 7, 8. They're number 8 on the list at 19 billion. And in terms of volume, they are I think 7, right? So let's hop over to Movement Mortgage. So Movement Mortgage, there was a huge shakeup there last year, right? So really the past year is indicative. It's showing a lot. I don't want to say it was politics, right? But there were some leadership changes, and I feel like there was a large group that left. But let's see how they've been performing as a stock over the last 12 months. So if we were to chart this out in the last week, they're up 18 million. 2 weeks, they're up 23 million. Month, a little bit more, 28 million. Quarter. So in the last quarter, they're still, they're up a little bit more in a shorter period, but going back a quarter, they're down $675 million. 6 months, 1.58 billion, and year 3.45 billion, right? So I'm pretty sure they're the biggest decliner in terms of how their performance has been. Yes, maybe in the last 2 weeks they're trending better, but they've been losing a lot of people. And so if you look at them as a stock chart, right, we're not throwing shade, we're just talking about the numbers. Numbers are what the numbers are. They're declining, right? And a lot of that is in the past year or the past 6 months. And I think it was quarter still bad, but in that last quarter, I would say it's kind of went down and it's still going down, and now it's like kind of flattening out. And again, that could be because there was a shakeup in larger group or leadership movement there, right? So Movement Mortgage as a stock chart coming down and now kind of flattening out. And it's not like, I guess you could say, sharply like continuing to just like plummet. So next we have American Pacific Mortgage, right? So currently let's look at this, right? So American Pacific Mortgage. This is number 13 in volume. I think in units are a little bit higher. American Pacific Mortgage, yeah. So 28,000 units. And remember, one of the things we're trying to look at here is, they're a purchase-based, company. Remember that we talked about Loan Depot, who is not as purchase-based, right? American Pacific Mortgage, let's look at and evaluate them. In the last week, they're down 20 million, so that's not good. The last 2 weeks, they're actually down 28 million, so a little bit worse. Month, they are down 85 million. Okay, so last month, not trending in a better direction, but quarter, they're actually up, right? So as a stock, if you look at them as a quarter, then they're actually better. They're up 174 million annualized production. 6 months, 602 million. In the last year, $628 million in annualized production. So as a stock, they've been performing really well over the last 12 months. It's only in the last, I think it was month, 2 weeks, so the last month and 4 weeks, they are not performing as well. More people leaving than more people are going there. It could just be timing, right? But not every company looks like that. Other companies are growing in the last month. But American Pacific Mortgage is doing well, right, over the last 12 months. So they're performing well as a stock. Next up, we have Union Home Mortgage. So Union Home Mortgage over the last year is, I would say that's almost flat. Like if you're, talking about a $7.5 billion company, that this time last year, they were slightly bigger, right? Staying the same. So if we were to evaluate them though as a chart, so let's look how they're doing. That's basically flat, only up $6 million. In the last 2 weeks, they're actually down 36 million. Month, they're up 51. Quarter, they're down 182. 6 months, up 94. And year, 37. So really, if you were to look at them, they're like a stock that's just going up and down, up and down, up and down. So Union Home is not growing and they're not shrinking. They definitely have been acquiring a lot of people. I'm pretty sure actually, if you go ahead and click on this and you can look at who's coming in, they have, I don't remember some of the names. If I clicked on it, we could see it, but I'm going to resist the temptation because I want to get through these companies and just get you the data. Get a Redditor account and you click on it, right? If you want to see it, or message me. I'll do it for you if you message me. But they've been gaining and losing people, right? So Union Home Mortgage as a stock chart has been remaining flat. So last but not least, NFM Lending. I believe they were technically last. I think they're actually, so in terms of volume, let's look at, oh, that's loan count. So loan count and volume. So technically they do more volume slightly than Union Home Mortgage, right? They do less, so they do more volume with less units. Probably because, well, let's look at it. Union Home is doing more refinance business than them, and purchases are generally larger because it's a purchase, right? So NFM Lending over the last year, growing. So they are not flat, unlike Union Home. They're on an upward trajectory in the last year. But let's look at them as a chart, as a stock chart. So in the last month or week, they're up almost 15 million. 2 weeks, wait, did I say up? They're down. NFM Lending in the last NFM Lending today, right? Last week, down 17, almost 15 million. The last 2 weeks, down 18.2 million. Month, they're actually up 88 million. Quarter, not as good. Coming sliding a little bit, but still up 58 million. 6 months, 431 million. That'd be an interesting click here, is to see who are the people. That's a pretty big swing going back. Well, I mean, it's, the difference of another 3 months, and then year, $241 million. So that is interesting to me because in the last 6 months, they're doing better than year, right? Because again, think of this as a stock chart, right? In the last 12 months, they're up a little bit, but in the last 6, they're actually up even more. But since then, they're growing, but not growing as much. And it's only in the it's arguably flat, right? That they're having, in the last week or 2 weeks, not as significant of production. With that said, thank you for watching this top 10 IMB mortgage lenders as stock charts, right? I'm open to feedback. If you have ideas or thoughts, please throw them in the chat. I would love to make this information better, but really just focused on getting better data out there for people. The data is the data. Don't be mad at it, right? And don't be mad at the messenger. I'm just sharing with you what the data is doing. Next up, probably going to be doing brokers, top 10 brokers. And then my thought is to skip banks, just because banks are not as retail purchase focused based like referral based loan originators. There are some there. I have friends who are awesome, but companies are not as significantly focused on that. Except there are some banks like Luminate, Novus, Cornerstone, I think, that are banks that operate like IMBs. So I'll have to find a way to slide them in here as well. So, and we're probably going to look at some of the next, not just top 10, but we're going to look at the next 10, right? Whatever, top 20, and skip the top 10. So that way we can look at the next 20. Thank you again. If you made it this far in the video, I appreciate you. And I talk a lot, but thanks for listening. And I'll see you in the next video. Cheers.